Hi, this is Lisa. For those of you that are on the webinar, we are going to get started here in a couple minutes. We will email you if you have not already received, you probably haven't, a sign in and a sign out sheet. And then during this presentation, we are going to pull up 3 poll questions, and those have to be answered in order to get the CE credit. So let me put you back on mute for a couple minutes. If you would, please give me a thumbs up, or in the question area, let me know if you can see the presentation and if you can hear me. Thank you. All right, just a couple more people have joined the webinar. Just wanted to reiterate, we will send you a sign-in, sign-out sheet by email. And also during the presentation, we're going to post 3 poll questions, and you will need to answer the poll questions in order to get the CE. They don't need to be answered correctly by any means, just to show that you are participating throughout the webinar. I am in a room with others, so you may get a little bit of noise and background. Hopefully this is the first time that we've done this. You are able to hear clearly, and the background noise is not too distractive. So we are going to go ahead and get started. Okay, good. Oh, I was going to say good morning. I guess it's good afternoon. It's right at 12 o'clock. So I want to get started because I want to hold to, like the 50 minutes and get everybody out of here. I do have some people on the phone, like I said, so we're going to stop a couple times so they can answer the poll questions. I lost mine. All right. So today we're going to talk about the new HRAs. Who has read up on the HRAs, the ICRAs and the EBRAs, and think that they're going to utilize it? None. Okay. I will say, I think it really depends on the market that you're in and how the individual rates look. But I have heard that carriers are starting to release like new plans to align themselves with ICRA. Maybe some rates will start looking more attractive in some areas. At the end of the presentation, I'm going to show you this slide. I think VeriCred for it. I have a colleague that works for VeriCred, and she shared this with me. And it really shows those markets where the rates make sense for this. But I would keep your eyes open because these new plans can give you opportunity to sell new business. So think about the groups that don't have health insurance at all. And even though the rates may be high, it still gives you an in to talk to the company. And they, quite frankly, may be interested in it because they may want to contribute a small amount towards it. All right. Let's see if this was working. No, it's not. As with any CEs, you must remain in the room, all that information, no auditor in here. Okay. Now I can't get this to go forward. Please sign in at 12 o'clock and sign out at 1. So we're going to run about 50 minutes. There's a lot of slides here, so I probably at the end, I threw some kind of resources and tools in. This is not part of the CE, but wanted to, when we send it to you, at least you'll have that information available, and we may get to it. We will, at the end, we will email you a certificate. So please make sure that you sign in really legibly, at least your email. And if you don't have your number with you, we'll reach out and get that number from you too. If we can't read your email, we'll still process it, but we won't be able to send you the certificate. All right, we're going to start out today talking about, I feel like I'm really close to you, the evolution of HRAs, where they began, where they've been, and really what we're seeing in 2020. Who wrote QSERAs, the Qualified Small Employer HRAs? Anybody? we probably had, I don't know, a couple dozen across the country of them. So it really wasn't a big play, probably because there's a lot of limitations with QSERA. Then we had the HRA, the final rules. We'll talk about that. And we got introduced to something new called ICHRA, and I kind of call it the QSERA on steroids with a lot more flexibility. We'll end with the accepted benefit, or the EBRA, and then how to talk to clients and probably more so prospects about these different plan designs. All right, so HRA started back in 2002, and we wrote a ton of HRAs. There's a lot of flexibility with HRAs. We even do a lot of stacking, HRAs with FSAs, HRAs with HSAs. Love that plan design. And then when back in 2010, when ACA came around, there was an Internal Revenue Notice, 2013, I think it was, -45, that basically put an end to using HRAs to reimburse individual premiums. And we were writing a fair amount of those as well. So it was kind of like this unintended consequence of some ACA regulations that caused that to happen. How many people wrote those PRAs, we used to call them, premium reimbursement accounts? No? All right. And then, well, in 2013, that's the 2013-54. Yes, that was that notice that kind of put a halt, or an end, I should say, not a halt, to all of that. And then we saw something called the QSERA that came out of the 21st Century's Cure Act. And QSERA was really kind of that Band-Aid to what we saw, that unintended consequence. So allowing small employers to offer an HRA to reimburse for individual premiums. And like I said, we'll show you all the limitations, the compliance regulations around it. I can see why it didn't go very far. What's that? You wrote?
That's what I ran into.
Too much.
A couple of folks, it was too hard to get past the red tape.
Yeah. Well, spoiler alert, ICHRAs are not much better with the compliance. You know, you have more flexibility, but there's still a lot of compliance. Then we saw the Trump's executive order in 2018, and he really wanted to increase the usability and the viability of HRAs. So he tasked the three, departments to really come up with some regulations around it. So we saw the new proposed regs to expand those HRAs, and then in 2019, like June timeframe, we saw these final rules that were issued, and that's what we're going to get into today. We have since, even though when they issued it, we have seen some proposed safe harbors, because some of it is very challenging, as most of these, when it comes out, they don't think about the applicability and the practicality for the groups. So let's start with the QSERA very quickly, so you have a reference base of how all these plans compare. And when I talk about that, remind me, I'm just going to set it out here. We put together a really easy comparison between the three plans. So pick these up on your way out. I find myself referencing it all the time. It's a good cheat sheet. And those of you on the line, I will send it out to you as well. So as I said, the QSERA was really to fix those unintended consequences of ACA. It would allow small employers to reimburse individual health insurance premiums. They must purchase the on the individual marketplace, and not only the premiums, but it was these are eligible for 213D expenses as well. So just like your regular HRA plans, 213Ds can be covered, you know, dental, vision, co-pays, co-insurance, all of that. But this allowed the individual premiums to be reimbursed, what ACA kind of took away. All the reimbursements, just like standard HRAs, are tax-free. The employees do not have to pay. And it did offer some flexibility and choice, because as an individual, I could go out into the marketplace on or off exchange and purchase an individual policy. It supposedly helped stabilize the individual market. You could question that, whether or not it did that. But what it really allowed was a small employer, so a non-ALE, not a small employer under 50 employees, to reimburse for the individual premiums. And that's really what we saw more so than the 213D plans. They do have to be enrolled in a MEC plan, though, okay, to be eligible for this individual reimbursement. And there were certain classes that could be excluded. Under age 25, any of your union contracts, your collective bargains, part-time seasonal people. And again, these are your individual eligible expenses. The premiums, 213D, deductibles, coinsurance, and so forth. But you'll see there's an annual limit to the reimbursement, very different than what we'll see with the ICHRAs. All right, so in 2020, it just bumped up $100 for the single. It went from $5,150 to $5,250, and then the family is $10,600. So the employer decides how much and what, like HRA flexibility, they want to reimburse under the QSARAs. So they don't have to make that full amount available. Amounts can carry over from year to year as well, so there's flexibility with that. Uniform rules apply. So even though you don't have to run all the non-discrimination tests, you have to make all these benefits, whatever it may be, consistent amongst your eligible class. No waivers are allowed. So no group health plan, okay? This small employer cannot offer a group health plan, and those that are defined as eligible for the plan are enrolled in it. Okay, so not a lot of flexibility there. Notice this too, it disqualifies somebody from the subsidy. That could be an issue for, a lot of people. So I think that's another reason why we didn't see, as much.
Can you I ran into the accepted benefit language and ran into problems with that. Can you clarify what that really means?
We'll talk about.
Have a health plan, have a dental plan.
We'll talk about accepted benefit. So QSARA is first. We're going to go through ICHRA, the individual coverage, and then we're going to end with the accepted benefit. Yeah, it's dental and vision, certain premiums, not much. Like
funding of it. Any employer contributions, right? That's the problem.
So EBRA can be individual premiums for dental and vision. It's really not. We'll get into it. There's more there. The QSARAs are compatible with HSAs. Again, if you have a QSARA that's only reimbursing for individual premiums, no issue whatsoever. You have issues when you start reimbursing some of the 213D. So if it's deductibles, you want to make sure that the HSA deductible has been met first. But again, I'm not going to go into a lot of detail with this because very few people found it fit their needs, okay? And I think that everybody kind of saw that, and that's why we had that Trump executive order, there you go, to really expand the HRAs because QSARA wasn't fitting the bill. Confirm you are not an ALE. So companies, sometimes, the number is very close, especially if they have a lot of part-time people. So it must be under 50. A non-ALE is the only companies that qualify for QSARA. And they cannot have a group health plan. So if they do, and they're putting in a QSARA, they've got to term that group health plan. That's not too easy to do sometimes. If they do put it in place, they have to establish the eligibility date, and then they have to define the eligibility, effective date, and the eligibility. So we're going to put this in place January 1st, and only full-time employees are eligible. We're going to reimburse for premiums only, $400 a month. Okay, that's what's going to be in your plan document. That's the definition. So there is some flexibility there. There are plan documents, though. When you take a look at this sheet here, when you go ICHRA, EBRA, and QSARA, it's going to tell you whether or not ERISA is applicable, and it is for that. So there are plan documents, and there's also employee statement requirements. This is also another challenge with QSARA because you have to put out a statement 90 days prior to the effective date. Well, small groups, a lot of times 90 days prior, they still haven't made a decision, right? So it is challenging. Nobody's experienced that? So it's challenging to hit that 90-day requirement, but it is a requirement, okay? And in the notices or in the employee statements, there is a list, and there's sample statements out there of all of the different things that need to be included in those documents. It does require substantiation, so you have to show, you know, the monthly amount for the premium. And there's a lot of similarities as I'm going through this with the ICHRA. There is substantiation, and I can't say this, but you have to attest you're enrolled in an individual medical policy. Attestation. And it can be compatible with an HSA. Just be careful if it's not only premium, that what you're reimbursing, if it does include deductibles, that HSA deductible minimum threshold is met first. Summary plan descriptions. It is an ERISA plan, just like any of your HRAs, all right? So you need a summary plan description that's distributed to the employees and a special notice. That special notice outlines how it plays or doesn't play with the tax credits on the exchange, the eligibility, the benefits amounts, and so forth. And it does include ERISA language in it. The employees must inform the exchange of the amount due to PTC, okay, your premium tax credit. Of course, the exchange needs to know what you're getting under the QSARA. That's messy, right? I think another reason the QSARAs didn't really take off. Here's your 90-day notice prior to the beginning of the plan year, okay? ICHRA also requires this. I'm throwing out some spoiler alerts here when we talk about ICHRA. And right now, we're not writing any ICHRA groups other than March 1st, and even now that we're in mid-January, we're talking about April 1st. So that really shows you how challenging this can be. It is not subject to COBRA. That is a nice thing. And it is not subject to non-discrimination testing, although you have to provide uniform benefits for all the people that are eligible. Remember, you can exclude certain seasonal, under age 25, the union contracts and so forth, but those that are eligible, it must be consistent. W-2 reporting, they want to know what you're getting, right? It's a tracking mechanism, but it is not a taxable event. So you can see, not so great, right? It's not that attractive. I think I've got a poll question. Maybe not. Is it? Oh, do you see it on my computer? Thank you. Okay. I got my assistant here. All right. So the final rule, generally what it says, it is, you know, President Trump said through an executive order, let's make these HRAs more attractive. Let's make them more usable to the employers. There's, you know, the Kaiser Family Foundation, they produce a lot of good statistics. I don't know the numbers exactly in my head, but since 2010, the smaller group market has dropped fairly significantly. It's like 12%, I think it was, in enrollment in group health plans. So these new plans, even though large employers can establish them, really the idea was to target the small employers, give more flexibility and choice, because smaller employers also typically don't have choices. Employees usually have one medical plan. So it was trying to address a couple areas, and we'll talk about that too. It does expand the HRAs. They were saying that it can, and we put it in here, transform the health benefit landscape. Unless the carriers transform, I don't think it's going to transform that much. But we do see pockets in the Northeast, New York, Connecticut, when rates are really high. California, we are seeing some good movement in this area. Virginia, not so much right now. But again, you know, watch for it because we may see some changes. So the Department of Labor, HHS, and IRS, they did release the final regs in June. effective for 1/1 start dates. But remember, because of that 90-day notice, a lot of times groups that may have decided that, and let's say you're talking about renewal, they decided that they wanted to offer an ICHRA in addition to the group health plan, and we'll talk about how you can do that. The decision was made in November. Well, that's a problem because of this 90-day notice, okay? We are holding to that. Our compliance department is headed by a couple of ERISA attorneys, and they're pretty conservative. They're sticklers. You may find another company that's willing to bend the rules, but we feel like that's our job, is to keep the groups in compliance. So unfortunately, because of that 90-day period, sometimes it may be challenging to get that in place on the effective date that you want. The nice thing, the change here, is any size employer can offer both the ICHRA and the EBRA, okay, these two new HRA plans, where we saw the QSERA was only for small group. All right, so more flexibility there. It is a defined contribution plan. I remember years ago doing different CEs on defined contribution. We thought that's where everything was going, and we talked it up, and the market didn't dictate that, right? Who knows? I may look back a couple years from now and say, remember when I was talking about these ICHRAs and nothing ever happened? We'll have to see how the market changes with that. And QSERA did not go away. Even though it was before the final regs, it did not change. All right. So it wasn't next, actually. I'm getting over here to launch my poll. And so some quotes from the different departments. So the Labor Secretary, this is how confident they are. The HRA final rules offer millions of American workers more health coverage choices and portability. That is true. But there's a lot of other things we'll talk about that you see that maybe it will stop it. The HHS Secretary, too many Americans today have little say in how their health care is financed. We'd all agree with that, right? But I don't know, if this is going to be the end-all be-all answer. But they did project over the next 5 to 10 years, roughly 800,000 employers will offer ICHRA. I don't know. With more than 11 million employees. They're proud of themselves, right? And then the Treasury Secretary, this new rule gives businesses a better way to offer health insurance to employees and allow workers to select coverage that best fits their and their family's needs. Maybe, because it's an individual policy, they can choose what plans make sense for their family, what networks, and so forth. But again, with the other regulations and stipulations we'll talk about, even though that may be the case on, high level, we'll see what happens with that. All right, bear with me for a minute. Everybody on the phone, got to get my glasses here. I'm going to launch this poll question, and I want to do it fairly quickly because I have the audience here waiting on me. And the poll question, what two HRA plans were included in the final rule? QSERA and EBRA, EBRA and ICHRA, or ICHRA and QSERA? So if you will go ahead and launch that or answer that, please. QSERA and EBRA, EBRA and ICHRA, or ICHRA and QSERA? You guys, you have an answer for that? EBRA and ICHRA. Okay. So I got everybody. I'm going to close that out and continue on. All right. All right. Not terrible. So ICHRA, this is the one that's going to be lengthy. This has got a lot of stuff around it, but I think this is the one that you're going to probably talk about more so than the other. It is a defined contribution approach. So employer is defining an amount. It does provide employees with options, again, because they are purchasing their own individual plan without the help of the employer. Employer actually is prohibited in helping. If they do help, then this individual policy will fall under ERISA. So the HRA, the individual coverage HRA, does fall under ERISA, but the actual benefit plan, the individual policy, does not. As long as the employer removes themselves from a couple different things. One is the selection process of that individual plan. The employer can control costs. They can determine how much. There's no limit on these plans. They can determine what they want to reimburse and how much they want to reimburse, okay? It does remove them from the insurance risk because they don't have a group health plan for these employees. Now, they can still have a group health plan, but they can also have an individual coverage, HRA. The key is you can't offer both to the employees, and we'll talk about how to class out what can be done. Hopefully, it will help attract and retain employees previously excluded from coverage. So think about maybe a small company that really doesn't have the financial means, the risk tolerance, the administrative personnel support, the compliance knowledge to offer group health plans. Well, to help retain, or maybe with this tight labor market, attract new employees, an ICHRA may really make sense. And this is where I'm saying it would be great for you, for prospecting, to have this conversation. May not end up being it, but maybe you can write a key man life policy, or maybe you end up writing a group health plan. But these are options that others are probably not talking about because it's new, and it should get you in the door. I've actually heard a couple of stories already, success stories for new business. It removes the integration requirements after ACA. So remember, when ACA came around, HRAs could no longer reimburse for individual premiums, but they also must have been offered with and working in conjunction with, I'll say, a group health plan. Okay, so this removes that. So actually, this Medicare, you can reimburse premiums in Medicare. I mean, we were all shocked when we saw that. Not TRICARE, but Medicare. And well, Part A, B, I mean, we'll go into that. We really looked into that thinking, whoa, this is, Medicare secondary payer rules still apply, but if you don't use the ICHRA, I'll call it, to reimburse for things not under Medicare, you won't have any issues with it. Greater design flexibility. Again, premiums, 213D, you can reimburse whatever, how much, extensively under these plans. So the advantages of offering a group health plan and the individual medical coverage to different classes of employees. I'll give you an example. We have a client that has some employees in California. California has some strange laws, right? You need to offer certain plans in California that's not available in Virginia. So the Virginia employees have the group health plan, and they put in place an ICHRA to support the employees in California to purchase their individual coverage and still provide a benefit. Because what was available in that market isn't available in Virginia. Okay, so just, some applicability, what we're seeing.
Lisa, what about contractors?
W-2.
W-2.
Are you talking that kind of 1099? Yeah.
W-2.
Yeah. There are classes of employees that can be classed out or offered, but they're employees. Any size company, we already said that. Active and former employees. So former employees, you can have spend down options. I don't see that occurring that much because this is a COBRA eligible benefit. So if a group is offering ICHRA as a company, I would charge a COBRA premium and not just let them spend down the balance in that account. Employers can have a group health plan. Although you cannot, those that are eligible for the group health plan cannot be eligible for the individual coverage HRA. So one or the other. So again, we'll talk about classes and how to do that to offer some the ICHRA and others just the group health plan. Your eligible expenses should look familiar to you, the same as the QSERA, no difference there. The difference is the size of the group and no maximums. Non-discrimination rules do apply Okay, where the QSERA, you did not have to run non-discrimination testing. ICRAs, you do. If you're only reimbursing premiums, NDT does not apply though. So it's only when you're reimbursing your 213D, your deductibles, co-insurance, and so forth. Your ownership rules, right? Your S Corp can't participate, 2% shareholders, your sole props, all of that. Think about your standard HRA exclusions applies here as well. This is an ERISA plan. We'll, in a minute, get out to the class, talk about all the different classes. It is portable, so think about that. I mean, an employee can leave and take their individual policy with them, and they don't have to, change. Yeah. In the SPD, you can have a spend down option that the a former employee can remain on the plan and spend down what the employer is offering. Yeah, use COBRA instead. Employer determines the amount. They can offer the carryover provision. It doesn't count towards the total of that plan year limit. I will caution you of doing any kind of carryover because remember that COBRA is applicable, and it just, in my mind, it just opens up greater financial risk for the employer because if they can continue to roll over each year and build a balance, then potentially you have more COBRA abuse there. You must offer an annual waiver every single year because this will affect or potentially affect, if it is not deemed affordable, the ability for somebody to get a subsidy. So that's why that needs to be in place.
This might be too detailed, but on the typical HRA COBRA eligible, determine how much you can charge the employee based on the actuarial value, blah, blah, blah.
Right.
How do you determine the premium on that?
So our ERISA attorneys are thinking it's that 75% of the premium amount that they're allowing to be reimbursed. There hasn't been a lot of finite, so we're just using what we typically say in the HRAs until maybe we see some further, safe harbors or proposed regs on that.
And where do they enter that in the individual market so they're going through the federal?
It can be on or off exchange.
No, that's what I mean. So when you're doing the application on exchange and you're an individual and you want to try to qualify for a subsidy, you're putting that information as because they don't have that, not that I've seen yet, a spot for.
I think that should change.
So is it going to be like company offered health plan? That's where you put in the amount, the premium amount.
From what I understand, at least federal, I'm not sure about different states, that's going to change where the option will indicate the ICRA. Yeah. And it's, again, you'll see there's reporting that it will show up. So they'll get caught. All right. Health plans. If you're participating in the ICRA, these are the plans that are allowed. Individual medical, on or off exchange, of course. We've talked about that. Catastrophic plans only under the age of 30 and if they can show financial hardship. So typically not catastrophic plans. Look at this. Medicare, Part A, B, or Part C. Premiums reimbursed, all right? And student health insurance. If the company is offering any of these or they're participating in any of these plans, they cannot participate in the ICRA. Short-term limited duration insurance, any of your healthcare ministries, I'm seeing more and more of those, fixed indemnity, accepted benefit coverage, vision and dental, so your EBRAs can't work with ICRAs, association health plans, MEWAs, and TRICARE. Okay, TRICARE, no, Medicare, yeah. What?
I had a question about the hardship exemption catastrophic plan. I had prior to this. Do you know any more about that?
I don't. I can find out for you. It's just, it is a possibility. I don't know what that hardship definition is, but isn't it on when you enroll? Isn't there questions on that? If you run into that situation, let me know and we'll get, more definitions around that. Non-discrimination testing. So you have to offer the same conditions, the same benefits within the same class of employees. We haven't even talked about classes yet, but I think there's 11 different classes, so this can get very creative. You can increase the maximum dollar amount, though, even though non-discrimination testing does not let you discriminate based on age, years of service. There is a safe harbor that was just recently released saying you can provide based on your tiers of coverage, like single, plus one, family, and also based on age, because your individual rates are age-banded rates. So maximum dollar amount made available to the oldest is not more than 3 times the maximum for the youngest. Okay, that's the stipulation there. We're going to talk a minute about what that dollar amount or the rating feature is. And you can vary by tiers. ICHRAs, like QSARs, are compatible with HSAs. You, again, want to consider, if you're not just doing premiums won't mess anything up, but if you're doing any kind of deductible reimbursement or 213D, you got to remember that HSA deductible, statutory minimum deductible, must come first, and that's written in the plan design to handle that. You can have a health FSA with this, okay? So let's say it's a premium, ICHRA, premium only plan, and you can add a group FSA plan to help and allow them to get reimbursed with their own money, pre-tax money, for any out-of-pocket qualified expenses. Medicare, we talked about that. It integrates with Medicare Part A, B, or Part C, and it does reimburse premiums for Medicare, including Part D and any of your supplemental coverage. So, interesting, but yet these Medicare employees can't be eligible for the group health plan. So we've got to kind of consider that and think about that. So this is a big part of the ICHRA. This is, I feel like, the make or break in a lot of cases, if this makes sense or not. You can class out employees. Who's going to be eligible for ICHRA? First off and foremost, they cannot be eligible for the group health plan.
You said that the Medicare population should be eligible for group health plan.
Yes.
Hypothetically, I'm 64, aging into Medicare. Small employer cannot induce me to join Medicare. It's illegal. Isn't that just a train wreck waiting to happen?
So, yeah, I mean, there's a lot of challenges with this compliance, documentation. They can't be eligible for the group health plan. If they're not eligible for the group health plan, they can use the ICHRA to reimburse premiums or participate in A, B, or C. No, questions with that. So it's going to be a case-by-case basis. Remember, Medicare secondary payer rules still do apply, but if the ICHRA is reimbursing anything, not just what's not covered by Medicare, you should be okay. I mean, I'm sure there's going to be more.
You're under 20, come on, you're under 20 people, you'd be safe to start talking about this. But over 20 gets to this.
Yeah.
What's something to be aware of? But you can't
aware of.
No, employees. How many employees is Medicare primary?
Primary and secondary you're talking about.
Class by age, so you can't just exclude it by over 65.
So you can class, if you can figure out a way to class based on this, you're golden. But I had the same conversation with somebody the other day. They were thinking, this is perfect, it's going to work. But yet they were a full-time employee and they were eligible for the group health plan. So, yeah. So you can class out part-time employees. So usually group health plans are not, eligible for, or part-timers aren't eligible for the group health plan. So maybe they're eligible for the ICHRA. Maybe you've got a really key part of it's tough to hire certain types of people. They're part-timers. You could class them out and offer ICHRA. You can class out seasonal, full-time, salaried, hourly. temporary workers of a staffing firm, where typically they don't get the benefit. Same geographic rating area, employees of a collective bargaining agreement, waiting periods not met, so anybody that's not eligible, non-resident aliens, which we always see that, and a combination of any of the above. So it could be hourly, full-time, for example, is your class. Think about what I was talking about, that California group. Maybe you've got a network in this area only. And that doesn't, you've got remote employees somewhere, and that's a challenge because of the network issue. Maybe ICHRA makes sense. If you are offering a group health plan, you must have minimum class size for certain classes only. And your classes are over here, full-time, part-time, salary, hourly, or geographic location. Okay? So if I'm an employer, I offer a group health plan, I've made the ICHRA available to my hourly part-timers. This is the class size that I need to meet. If I had less than 100 employees, I need to have 10 employees. Now, this was put into place so you didn't have, what's that? Oh, I thought you had a question. It was put in place so all your sick people aren't going onto the individual policies. It's trying to, that adverse selection kind of prevent that from happening. If you have 100 to 200 employees, it's 10% of the employees. That's total employees. It's not full-time, it's total. Or 200 or plus employees, it's 20 or more. The stipulation here for geographic location, I think this is one that's going to come up a lot. If the rating area is smaller than the state, meaning, let's take that California example again. Because it's not even within the same rating area, you don't have to meet that. I could have one employee in California that doesn't qualify for the group health plan that I can make the ICHRA available, okay? Because of the geographic location, the rating area.
So does that mean, Lisa, that if I've got a group of 10 employees, less than 100, that if I want to class out, that I've got to have 10 participating on the alternative class, the part-time class? If you offer
a group health plan. If you don't, then no.
Right, if you offer a group health. And is that 100, what is less than 10 employees, meaning 100%? So if it's 5, it's 5. If it's 4, it's 4. If it's 2, it's 2. Or if it's not 10, you can't do this at all.
Yeah.
And offer a group health plan.
Yeah.
So if it's not 10, you can't do this at all if you offer a group health
plan. Well, they can waive out of it. Well, they don't have to participate on.
What I mean is if you've got a group that has a group health plan in place with 5 employees, you can't class out with that group. They have to be 10 employees.
Of your classes. You're not having a separate, you could class out somebody that doesn't fall into this area.
Right, but it can't be part-time, full-time.
Right.
Or salary hourly.
Right. So classifications can be, a moving target for size, but also think about, combining the classes too. You can get pretty creative to try to meet the need or not meet the need. This is where I'm saying we'll see how applicable this really is once you start having those conversations. And, I can't wait to start getting more feedback from people. A lot of Medicare questions have already come up, or, location. That's primarily where we're seeing most of the discussions right now. Well, we'll see how creative people get. You guys may think of something that we haven't thought of. So we we're kind of putting together, collecting these ideas to publish stuff, because this is what we need, is feedback from the industry and what we're seeing. Special enrollment periods, keep this in mind too. So you've got to maintain coverage to qualify for this ICHRA. I've got to have individual medical coverage to get the premium reimbursement from my company. But you want to pay attention to the open enrollment period. Now, it does vary by state, but generally, we've got this short window, November to December 15th. So if you're outside the open enrollment period, you need a qualifying event. Well, offering an ICHRA for the first time would be a qualifying event, okay? New hire coming in certainly would be eligible, but you must do it within the 60-day enrollment to buy a plan, okay? So it does trigger a special enrollment, but you need to enroll within 60 days. So ICHRA does qualify as minimal essential coverage. So if you've got an ALE, a company that has 50 or more and has to follow the mandates, this can actually qualify for the mandate if it is affordable, okay? So you've got to offer it to substantially, the 95% of their full-time employees, and it's considered affordable. And affordability is the same. Go to this now. Affordability is the lowest cost silver plan, self-only premium. When it first was introduced, it was actually on the employee's rating area. Think of that. If you have multiple locations, and then they came out with a safe harbor saying, we realize that's tough. It can be on the employee's primary site of employment, okay? Meaning, where their status. Now, if they move around a lot, what's the primary state? It's where they come in that initial enrollment period, where their primary location is there. If they work from home and they have no office, then that is going to be their rating area. So the employer has got to really, on that affordability, that's critical because they don't want to pay the penalties. They've really got to pay attention to make sure that what they're making available will meet everybody's affordability requirement, or they're going to, have that penalty. So you can see where small and so it's the same safe harbors that we have now, the poverty, W-2, those three criteria, nothing differs there, but yeah. All right. So think about this. You got to look back month safe harbor that also was just recently released. The lowest cost plan, if it's a calendar year, it's so challenging, right? All these timelines. So what they said is the benefit amount determination prior to the date when the premium amounts may be available. So if you've got a calendar year, January 1st, let's say it came out, you can look at for the affordability calculation, the affordability of the plan, you can look January of that prior year. If you start plan year, you don't start January 1, let's say you put this in place in July, you can look to January of the current plan year to calculate that affordability. See that spoiler alert I was talking about, how the complexity of this, and is this really going to play out? So what does the employer need to do? They need to term the group health plan if that's applicable. If they want to offer ICHRA to a certain class of employees and it's not going to meet their need to still have the group health plan, they may have to get rid of their group health plan. Define the effective date and eligibility. They have to define the classes, and the combination of classes. And then if it's one of the 4 classes that has the minimum class size, they've got to make sure that that minimum class size is met as well. They have to determine the dollar amount, whether or not that they're going to allow a carryover, and if that amount's going to be prorated for somebody coming in mid-year. So let's say they're not only allocating X dollars per month for premium reimbursement, but they're offering, $1,000 towards the deductible. They may want to take 1/12 of that $1,000 and make that prorated each month. So a new hire coming in doesn't get the full amount. All right, this is an interesting one. Section 125 language. Actually, an ICHRA, so let's say the policy is $500, well, that's ridiculous. Let's say it's $1,000 a month, and my company's paying $500. I still have a $500 responsibility. You actually can run a Section 125 plan and have it taken out pre-tax through payroll deductions. So my $500 is paid with pre-tax dollars. You want to write it into your Section 125 document. But now, okay, now the employer's holding the money. So now the employer's paying, you know, like the administration of that. How does that all work? Right. And all the variances, and it's just, that's messy. As we talked about with the others, you must allow the employees to opt out of ICRA annually and at termination so that they can be eligible for that tax credit. Okay, if the ICRA is affordable, so, you know, across all classes, all rating areas, if it's affordable, the employee is not going to be eligible for the premium tax credit. But if it's not affordable, then they are. But if I'm an applicable large employer, I have a penalty if it's not affordable. So maybe, you know, the talk track is for small employers, maybe you want it not affordable. So the premium tax credit, 10 minutes? Okay. This is the biggest one. The EBRA is really short and sweet. Compliance requirements. Establish and provide ERISA documents. You're not getting away with that, okay? So your SPDs, your SBCs, again, that individual medical coverage is not the ERISA doc or ERISA plan. It is your ICRA, your individual coverage HRA plan that is ERISA. Form 5500 if required, subject to COBRA and subject to non-discrimination testing. So this is kind of, even though it's individual policies, it's full-blown compliance, ERISA compliance requirements here. In addition, you have to provide an annual notice 90 days before the plan. We talked about that. New hires, provide on the eligibility date. New employers, this is the only exception here, not new ICRA plan. This is what we thought when it first came out, that you could actually issue it on the first day of the plan year. It's only new employers. So that's not really going to come up that much. So annually, you have to prove that you're enrolled in an individual policy. And then each time you submit a claim, you've got to sign a form, and there's model notices. You can go to the site. There's model notices saying, I have individual policies. So your claim form, your substantiation, and your attestation is all required for each reimbursement. Does this look attractive? You must inform employees annually that the individual policy is not an ERISA plan. So even though the HRA is an ERISA plan and you're producing these documents, you also have to send out a notice saying, but your individual policy is not ERISA. So nobody reads it, so it probably won't confuse people because they don't. And you have to report it on the W-2. Okay, poll question number 2 real quick. And the last part is like 5 minutes. We're almost there. Okay. Poll question number 2 for you everybody on the line. Are ICRAs subject to ERISA? Yes or no? This should be real quick. Are ICRAs subject to ERISA? Please make sure you answer it. Okay. We got one more person. Okay, we're going to go ahead and close out here. So that is over. All right. All right, going on to the accepted benefit HRA, EBRA. Oops. The purpose of this is to provide funds in addition to the group health plan for health care expenses without needing to integrate. So remember I said because of ACA, HRAs needed to integrate with a group health plan. This EBRA plan does not, you have to be eligible for the group health plan, but you don't need to be enrolled in the group health plan, okay? It allows for higher levels of employer contributions other than an FSA. So this is not that common, but employers can contribute to a flexible spending account. But because of the non-accepted benefit rules, they typically have only that $500 limit threshold, or then it becomes non-accepted, and then they have to follow, FSAs have to follow ACA regulations, all right? So $500 really is your limit on an FSA. Some companies actually want to give more than $500. Again, doesn't happen much, but if they do, then this would be the plan to do it within the EBRA. It does allow for rollovers of unused amounts from year to year. And there's no need, as I said, to enroll in the group health plan, although it has to be offered. So again, just like the ICHRA, any size group can offer this. It's not just for the small employers. Active and former employees. Limited classes allowed based on the business criteria. So you can have classifications of full-time, part-time, hourly, and location. You'll see that same expense list is what we've seen with the others. Dental and vision premium, not individual medical coverage, health coverage, or group health coverage, but the dental and vision premiums are eligible under this, as are your typical 213D expenses. You can do deductibles, coinsurance, co-payments, all of that good stuff under there, okay? And you have some limited premiums, short-term limited duration. You guys sell that much of that? Yeah. And COBRA premiums, if you're on COBRA, possibility. The annual limit, it is very small though, it's $1,800, okay? That's for 2020 and it will be indexed each year. We have the uniform rules. You have to offer the same coverage, same amounts, same plan design for those in that same class. And we also have the same ownership rules on the HRAs as we discussed before. These are compatible with the HSAs because it's really dental and vision only. And then if you're doing your deductibles, again, keep that HSA minimum statutory in mind. FSAs, yes, can work well with this, and Medicare, but you can't reimburse the premiums under the EBRA if you're on Medicare. Employer involvement, the effective date, the eligibility, and the plan designs all need to be determined by the employer. And it is subject to ERISA, so you need that SPD again, subject to COBRA, subject to non-discrimination testing, and the amounts are reportable on your W-2. So all these plans have a lot of requirements to them, okay? EBRAs, if you want to talk about them a little bit more offline, not a whole lot there, but certainly can review that because we're running out of time. We're going to do one more poll question, and then I'm going to show you some resources and tools that you may want to use in helping you talk to your employers. Bear with me one more second. All right, so those on the webinar, what employers are eligible for, or what employees are eligible for the EBRA? Employees not eligible for the group health plan, employees not enrolled in the group health plan, or any employee defined by the plan document. Kind of tricky there. So with the EBRA, employees not eligible for the group health plan, they do have to be eligible for the plan. They don't need to participate in the plan. So we're going to, employees not enrolled in the group health plan could be eligible, but really that plan document is going to define it. So not the best question there, but it does show your participation. So you're done with that. I'm going to close that out. Never starts back up after I do this. Okay, so you guys, I know I've thrown so much stuff out here. There's a lot to talk about. Let me get this. Look, classy. Oh my goodness. Okay. So factors that are going to influence your ICHRA strategy, or maybe your lack of ICHRA, is your local market, the cost of the group health plan, the cost of the individual individual coverage, your labor market. Maybe there's a labor market that your group health plan is not covering. We have a really diverse workforce today. We've got multi-generations of workforces. So maybe this ICHRA can accommodate a certain, I don't know, not generational per se because of the classes that you have, but a certain class may not need a group health plan like the others, but you do want to offer something. You've got geographical challenges. This is what we're seeing most of the conversation around is based on, where employees are residing. Also, that ALE requirement to offer plans and not have the penalty, ICHRA could be a very good solution. If they don't want to get into the group health plan business and have all of that, they could put out an ICHRA, issue an ICHRA, even though it's got a bunch of compliance, just like a group health plan, it does offer the employees some great flexibility and the employer a lot of control over the dollars because they're going to say X amount is what we're reimbursing, that defined contribution only, and that's what's available. Very, very flexible. You saw collective bargaining agreements. Maybe you have a plan for collective bargaining agreements and you're going to offer everybody else that's not under that plan the ICHRA. We talked about the ALE. It does meet as long as it meets the requirements of affordability, it could satisfy those ACA requirements. And non-ALEs, your small groups, consider making it non-affordable so the employees receive both this and the premium tax credit. Maybe a really good business solution there. Factors that influence your Everest strategy. Employers want to offer group health plans, but they also want to provide additional funds. Nice employer there. They're seating an FSA, they're limited to the $500 that we talked about, versus an EVRA, the limit is $1,800. So it gives more there if that's what they want to do. Employers want to reimburse more types of qualified expenses. Certainly, you've got that whole list of the 213D expenses in addition to the co-pays, co-insurance, and so forth. It can create a very strong or stronger benefit program that you have without it. So again, it will really rely on your market and the employer that you're talking to and their needs. So I'm not going to talk about this. This will be in the presentation. We're just recapping with how QSARA differs from ICHRA. Basically, size of the group, limits versus no limits. This is what I'm going to leave with you today. I think, did I put it on that table? Okay. This is just a real quick comparison, a couple pages long. You can look at that and get a real quick synopsis. We also have something, another piece that I can email out to you if you're interested in more information on the QSARA. And we also are, like I said, tracking the applicability, so case scenarios where these make sense. BearCred, I want to thank them. They were very generous in providing this to us, and I think it really helps. You can see here where they're tracking all of the premiums. So here, where you see the orange areas, these ICHRAs probably make a whole lot of sense. In the blue areas, maybe not so much in today's market. This, when I send out the presentation, this is a live link to their site. And I think Courtney actually may be on this webinar. She signed up. I haven't checked, but she's the one that gave it to me. She's with BearCred. They have phenomenal data. So this is really helpful in tracking. So keep your eyes on it and talk to your carriers. You know, they may be making changes. Okay, so sign in at 12, out at 1. Email legible so we can get you the certificate. And those on the line, we will email you the sign in and sign out sheet as well. Any questions? A lot of information. Bottom line is a lot of compliance work too, right? Yeah.